Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 19th of December. What a day it was as the Fed raised rates. The market didn't like it. What I couldn't get all morning long is people buying into the Fed announcement. Kind of saw buyers coming in pretty early in the day. I don't know what they expected, if they had a crystal ball that just didn't come through, if they weren't following rules, if they were just crazy people, or if they were just a lot smarter than me. I don't know. But as soon as that announcement came out, and of course the Fed did raise rates kind of as expected. I mean, it's not like this is a surprise thing. Of course, we really sold off from there. So it should be interesting. We did take out a pretty major level of support in the S&P. We still have some support holding us together in our Dow Jones. So we'll take a look at our charts. Before we do, very quickly looking ahead to earnings going into tomorrow. Nothing of S&P 500 note coming out here today before the market closes, or after the market closes, I'm sorry. But tomorrow we will definitely see that. And am I streaming live? I'm getting two very different things. On the one hand, I'm streaming on my one computer, and on my other computer, I am not. If you're here and you can see me, would you please say hello so I can make sure I'm not talking to myself here, because on the one side, I'm seeing two very different things going on. I'm seeing me from yesterday. It looks like we may be having some technical difficulties here, and I don't know exactly how to fix them. Call me the market because I'm throwing a fit. Dimitri, hello. Clayton, are you guys saying hello now? Okay, so this is interesting. I'm seeing me from yesterday, and Clayton and Dimitri, are you guys here right now with me live? And hello, Linda. I don't know what the heck is happening here. So, oh man, I was doing so good about 2 weeks in a row of not having any YouTube problems. All right, interesting. So, okay, so you guys are seeing me, and I'm seeing a different screen altogether. Now, as long as we're seeing today's screen, then I'm good with it. I can go crazy all I want. So let me ask you guys a quick question, because I am definitely getting yesterday's replay. I'm going to come over to my charts. I'm on the Dow Jones chart right now, Linda. Are you seeing my Dow Jones chart? And is it just me seeing yesterday's recap? I'm on the Dow Jones now. I'll give you guys just a second. Yeah, I'm not. Okay, so you are seeing my charts. Okay, well, I can live with that. I can see the chat. I can live with seeing me from yesterday. I was worried that you guys couldn't see me from yesterday. So yeah, I don't even know how that's possible, but it's me and technology. It's always possible. So thanks, guys. And I hope you guys had a great day trading. No doubt about it. It was interesting. Coming back to where we get a little sidetracked, over in the S&P 500 tomorrow before the open, a handful of companies, including WBA, coming out. So we have CAG, ACN, CCL, WBA. Those companies will be reporting earnings, probably not the top of the market's priority list right now, but probably worth keeping an eye on. FedEx missed their earnings, and man, they tanked, and then they just kept tanking down over 12% today. Nasty. As we kind of shift gears over into our broad market, the S&P did clearly, and I've got the weekly chart just so we can see it a little more clearly before we look at the daily chart, took out that support level. As we talked yesterday, what's crazy as you look at the S&P 500 is where is the next stop? We have a long-term trend line. If you go into a monthly chart, we kind of have a long-term trend line, which is the trend line you see here. We have the 50-week moving average, or month moving average, I'm sorry, that you also see here, the 200-week moving average, an old breakout point. There is a lot of space. If our other indexes, fold here, there's a lot more room from a broad market perspective, at least in my opinion, because we really don't have much in the short term. I mean, we have little highs from days gone by, and maybe those things can catch as support, but I'm not going to be looking at them until things start to develop as their major levels of support. Very clean, very ugly break on the S&P 500. Let's go into its daily chart just so we can take a little closer look. Actually, look at the 15-minute chart. So we kind of had our, run to start the day before the Fed announcement. Again, I don't know what people were thinking, why they thought that whatever they thought. I was kind of scratching my head all morning long. And of course, I'm glad I was just scratching my head and not doing anything about it, because of course, here is our Fed announcement. And this is some pretty ugly intraday activity from there for sure. Over on the daily chart, again, clean break below that support level. I think the smart way to play this is from a bearish point of view is watch for that old support to act as new resistance. From a bullish point of view, I don't know how you can make an argument for it right now. Hey, if you want to let it simmer down before you go bearish, and I'd understand that. We are very extended to the downside, not that that necessarily matters, right? But from a bullish point of view, where's the argument? I'm just not seeing it. Over in the NASDAQ, we do have a little bit of an argument. We did hold support, at least for today, over in the NASDAQ and in the Dow Jones. So we've taken it out already in the Russell, of course. S&P today hanging right at that support level here in the NASDAQ. Again, if this thing falters, it's not quite maybe as ugly as maybe the S&P might look, but where really is the next stop? We don't have levels of support to prop us up, to tempt those buyers. And clearly, bears are firmly in control. Pretty important price point. Already seeing the S&P breaking through. Scary if you're a bull. Over in the Dow, very similar to our NASDAQ. We were able to hold support, at least for the day. That is where we kind of called it good from a selling point of view. But once again, I mean, this is kind of a recurring story. We've got a ways to go, and this weekly chart on the Dow Jones is absolutely terrifying. If you're a bull, textbook, M double top, whatever you like to call it, pattern, if that support breaks. Suffice it to say, it was a pretty rough day for the bulls. Taking out support in the S&P is never a good thing. And we're definitely gonna have to keep an eye on how we respond to these levels in our Dow and our NASDAQ, but it's hard to trust them. I'll respect them because I think you should always respect support and resistance. Trust them? Absolutely not. So not for me. Pretty rough day. And of course, our sectors are going to feel the burn, no doubt about it. I think you can probably at this point in time say that the material sector did break down. It kind of had that choppy top, was hard to gauge, but even kind of looking at the low end of the top of this old zone, we did, in my estimation at least, close below that here today. Basically as a continuation. Obviously, we don't want to go crazy, but we take out today's low tomorrow, that's probably going to trigger more selling, I would expect, as more people are looking at it from a bearish point of view and using that as a form of confirmation. Yeah, everything is ugly. Everything is ugly, but it's also beautiful, right? I don't like all or nothing markets. I prefer when some sectors are bullish and some are bearish, but the market cares none about what I like. Over in the energy, we filled up that space and we did it in a hurry. We took out that support on Monday. Here we are at the next level here today, looking from a longer term point of view. I mean, if this level can't hold, and who has a bunch of faith in the energy market right now? I don't know, not me. There's really not much. I mean, it's crazy, but there's really not much into $50. I know we're at $58 and it seems like that's too much. But when you look at it on a weekly time frame or a monthly time frame, again, there's kind of some choppy bottoms when we look at it on a weekly frame, but really our support was at $50. Very bearish still over there, closing right at support, no doubt. So we, maybe that will be a tempting point. Oh, did we miss the Russell 14? Or how did I do that? Let's go to the Russell then before we go through our sectors. We closed, not good, 14.0 from a bullish point of view. Very good from a bearish point of view. We filled up that space all in one day. Yesterday, we were kind of sitting on that 14 as a support level with 1350 as our next level. We took that out and we filled her up. We closed, at 1349, right below that weekly 200 average for whatever that is worth. We are at that next level of support with really not anything until 13. Really, if this support level can't hold, probably should expect the same thing that we saw, maybe not specifically in one day, but probably should expect that if this 1350 can't hold for us, realistically, we're probably working into 13 to test that level. So it was rough. It was rough for the Russell, filling up, one level to the next in a very short time period. Obviously, keep an eye on how we react to that, but really, at least in my mind, there's no support till 13. If this 1350 and at 1349, I don't think I'd call it a clean break or anything like that. It might be able to hold that, because that is kind of a number more than a specific, anything specific. But we can kind of see if that doesn't hold for us. Again, I wouldn't buy here, but if someone's buying here, they're buying a support bounce theoretically, right? I don't trust that. That's not my style, but I understand people do that. If that breaks, their stop loss is right below it. They're probably looking at the next level. So thanks for pointing that out, Fortino. I don't know how I missed the Russell, and probably a good thing I didn't, but not good. We did hold support, so we do have that to hang our hat on, but it's very, very limited. From an entry point of view, you're probably, for me at least, I'd love to see a retracement. We're getting very extended. That doesn't mean we can't go down further. That doesn't mean we shouldn't think we can go down further. But for those textbook type of bearish trades, we're probably not seeing as many today as maybe we were, late last week, right, with as much selling as we've seen this week. So thank you, Fortino, for pointing that out. Over in the financial sector, closed again, another close below that support level, so we've taken out another level of support. It's all right if you guys can see this. I can turn it to the weekly, but I think it's kind of easier to see this one on a daily time frame. Really not much to hold us up. If this support, which has been taken out today, really not a lot for a ways to go. I honestly will expect more selling because so many things have broken support. And again, I can only speak for myself, but I'm not buying any of this stuff. How can I just can't understand. That doesn't make it mean it's not possible, but I don't understand how anybody is buying into this. Fortino, as far as the announcement goes, I try to never have an opinion when it comes to news. I find for myself, I do better that way. I always, identify the events that can potentially move the market so I can, act accordingly. And I'm not really surprised. I mean, they've said all along they expected to raise it. Until I don't know, this morning when people woke up, that seemed like everybody was on board with, the Fed's been very transparent. They've been saying they're going to raise. Everybody expected this. I know for whatever reason I don't understand why people thought that they weren't going to. No one knows the future, but all signs pointed towards them doing that. They've been very transparent with their approach lately. So I didn't understand why people were buying. That's what really threw me off today, Fortino. It wasn't that they raised the rate. I think that was, the hands-on favorite, odds-on favorite for them to do. I'm not surprised that it sold because the market will sell on anything right now. Volatility's high. People are scared. It doesn't need, an excuse. So give it one. It can easily sell. The thing that threw me off all morning long, and I still don't understand why they were doing it, but buyers were coming in. I thought it was crazy, and I'm glad I did. So I wouldn't want to be one of them. So we'll shake out, obviously, but right now still very, very jittery, very afraid. And now the problem is, and hey, Whitney, how are you? The problem is now we are in a spot where support's broke, going into, this week, support was holding up for us. You're absolutely right. And again, I'm just one person and one guy. I don't move the markets, but where are the buy signals? You look at industrial, another clean break in the industrial sector. So things are not holding support. We're seeing major breaks, a major break on the S&P 500. I just don't understand who's buying. Someone's going to have to before me. I know that. Over in the tech sector, much like industrial, we did break a little rockier, especially with the NASDAQ kind of sitting at support. From a bearish point of view, I don't think there's as much clarity as I would like there to be in the tech sector right now. We have the NASDAQ still holding support. Again, that can break as early as tomorrow, of course. And we've got a little bit of back and forth stuff, not a very clear number, if you will, for support over in our tech sector. It doesn't mean you can't go bearish, doesn't mean it's not showing a lot of bearish tendencies. I just think other areas have cleaner breaks in my estimation right now. But again, that's just one man's opinion. Clearly, it's still breaking, and any hope, that last week maybe we're putting in that higher low, maybe showing a little bit of a shift in momentum. We saw it kind of developing on the hourly time frame. That's gone, right? Though that pattern taken out. and we have to start all over again if we want to do anything from a bullish point of view. Staples, another rough day, taking out that trend, of course, yesterday after taking out support just the day before. And here we are at that swing level of, another level of support here today. If you look at this one on a weekly chart, this thing to me is really nasty. I expect that when I go through my watch list, my S&P routine on Friday, I suspect, unless something crazy happens tomorrow, that I'm going to find a lot of things that I'm liking the way they're looking for breakdowns within this sector. This is a support level. We saw it on the daily, on the weekly. We're looking at this, upward trend. If this falters, that's taken out too. That got ugly quickly. I do think it gave us some signs. We talked about them together, so I don't think it was completely out of the blue. Obviously, with the market selling off heavily, everything is going to probably drop more than it normally, quote unquote, would do. But we're right back here at support. Again, we kind of saw the top of this trend line act as resistance on the intraday. If we rally into that trend line again, that can be an interesting area to look to sell. If we break, again, maybe not on the ETF, but I wouldn't really argue against it. I do think there might be some interesting breakdown candidates within this sector in the very immediate future with the way it's looking personally. Utilities, on the other hand, the only area that maybe, and it's not there yet, and it's not been pretty, and it's been volatile, but maybe shaping up for some bullish opportunities as things kind of simmer down a little bit. We've held trend. We've kind of held on to that average. We're putting up a fight. I don't think, the overall pattern has been taken out yet personally. I still don't think we've seen any buy signals. I thought maybe earlier in the day today that maybe this was going to be the day that I could say, if we see some upward movement tomorrow, there might be something here. That's not the way the day finished, of course. It's not how it starts, it's how it ends, right? And we are still kind of churning through there. As long as this general pattern holds, I am personally open to bull plays within this sector from a market point of view. That's the only sector I think you can say that on right now. I know it's the only sector I can say it on right now. Even my old friends in healthcare taking out support, selling heavily on the day, did come off of the lows, but again, as we've kind of looked before, we don't know the future, but really from a buying point of view, now that we've taken out that low, I can't see any technical reason why we're not testing $84 or thereabouts before we take another run at things. With all of these, of course, watch these breakdown points as the resistance. That should be the first challenge. They should present, a challenge for the bulls if we do have what it takes to rally into them. They can be potential entry points if we're looking to go bearish. They can be potential, stop loss points if people are already bearish. So many people are going to have stop loss right above it, right? So all of these old support levels that we're taking out today, keep an eye on them as resistance zones as we get into the last couple trading days and then next week here. Discretionary, not to be outdone, really nasty, continuing to break, still working towards a longer term level of support. So something that we will definitely want to be keeping an eye on. But again, very ugly overall there. I know Jonathan asks, what's my take on the defensive sectors? I mean, right now for me, and this can and likely will change in the, in the next week or so, Jonathan. But right now for me, the only thing I could even, and I can't see it happening tomorrow for me, but the only sector that, that I like, period, from a bullish point of view, and of course it is defensive, would be that utility sector. There's just so much. There's way too many issues in over in the consumer staples from a technical point of view, in my opinion. So many things have taken out support, potentially changed their trends, and if they rally up, pull back, make higher lows, break resistance, then I can change my tune. But I'm going to need to see that before I go forward. So I'm going to need to run up to 53, have some sellers come back in, pull back down to 52.40, run back up and break resistance. If I see that within those defensive sectors, Jonathan, that will be a sign that I can maybe get back on board. Right now, until I can see that, these charts, to me, forget about the name, forget about where they're at. They're bearish, in my opinion, until they prove otherwise. So I hope that makes sense where at least I'm coming from in regards to into the more defensive sectors. Uh, yeah, I mean, basically, you know, because I don't know why utilities is. I mean, it is one of the more defensive areas. It has been performing well. So I don't know why it overall is holding up better, but it is. And that's how I always try to look at things, as opposed to my opinion of, you know, utilities are good for this, that, and the other reason. You know, I like to just kind of go with, hey, the trend is still intact. We're still showing overall strength. Yeah, we've had a rough week and we're not getting the buy signals, you know, in my estimation right now at all within this sector. So this purely is still a watch, in my opinion, but it's held trend. And that's what's such an important part for me, Cosilla, is holding the trend. Whether I understand why it's happening, I can clearly see that it is happening. And that's always the approach that, at least personally, I like to take, so I don't let my own personal biases get in the way of what's going on. So I know that might not be the exact answer you were looking for, but that is my approach to trading all around, and that's kind of where I'm seeing at least the utility sector currently. Over in real estate, again, another one that we could have liked, but I don't see how you can like this one right now. The only thing, you know, we're starting to see, you know, some intraday floors develop that could present opportunities for, you know, some more, you know, bearish downside. I think the best scenario, what I would like to see within the real estate sector, because I could see myself getting on board potentially in the not too distant future, but I'd really like to see us go sideways, develop that crude type of pattern where we develop a clear top, a clear bottom, and then wait for a break either way. A few days right now, I'm not opposed to at least thinking about bearish if we take out this intraday floor that we built over this trading week. I have a hard time seeing, you know, any way I could be bullish tomorrow. That will be an area that I'm watching. But if we go sideways for a little bit and can kind of ultimately break out and it works out to be to the upside, there could be something interesting there. I'll feel a lot better if that happens, if we're back above this old resistance zone, back above that 50-day moving average. Right now, much like yesterday, for me at least, I think real estate is best left to work itself out for a little bit longer. I could see maybe an argument for a short-term bearish trade breaking this little floor that's broke over the last couple of days. But I mean, if you're going bearish, I'm probably going to find things I like better in more, you know, bearish, in my opinion, at least, sectors. So for me, I really don't think real estate is in a great tradable spot right now. That, of course, will change in the days to come. And lastly, over in communication services, they'd kind of been held up, hadn't broke. Well, that's over. And, you know, hit a new all-time low in this sector here today, as it has continually done since its very existence, right? Never not done that. So, you know, again, everything was hit pretty hard today. And the scary thing is, you know, some days we see a lot of selling and, you know, it's the market throwing a fit. But some days you see the S&P break resistance. That is not a good signal. You know, it's going to be really important that we get back above that, for me at least. Yeah, new things can and will ultimately develop if we continue to move to the downside, which I don't see why we wouldn't. Like I said, really, I think it's up to the Dow and the NASDAQ. Will traders move in off of those support levels? If they do, that'll probably trickle into the S&P. If it's an actual strong bounce, which I don't really know that it will be, but if it is, that might be able to get us back above and make this turn into a little bit of a fake out instead of a breakout to the downside. But right now, that's all maybes, right? Right now, the simple reality is we've taken out a pretty, in my opinion at least, major level of support. Bears are firmly in control of everything right now. VIX continuing to spike as traders. I mean, again, until we start to dip, and again, the philosophy I think we should always have is what's happening is probably what's going to keep happening. And right now, traders are scared. They don't need much of a reason to sell. They can do some weird things like buy going into the Fed announcement, like they know the future. That one's going to drive me crazy. I can't wait to talk to some of the other coaches. I haven't a chance to talk to any of the coaches today. Can't wait to get their takes on it. But another, you know, increase in the VIX here today as volatility. I mean, it's not going anywhere. We saw it dip, you know, late last week, but certainly not to lows or anything like that. Right now, we're going to continue to be volatile until we stop. And right now, with things breaking support all over the place, it's hard to see that happening tomorrow. Over in the dollar, another one of those kiss off the 50 days, another volatile session for the dollar. Worked into the 50-period moving average again on the intraday and popped right off of it. That has been very responsive to that 50-day moving average on the intraday. The simple reality is if you're not staring at it right then, it's moving really quick. I still think we continue to look at it as kind of a range bound with a little bit of a bullish bias right now, as long as that 96 holds or that 50. I mean, you can start to make more and more of a case to go completely neutral, maybe even skewed a wee bit bearish if we break that 50. Now, for me, at least, I think the signal is probably going to be a break of 96. That would concern me. I do expect if we break the 50 that we'd probably not have a hard time working back into 96, but I think that's still the support level and resistance, of course, up top. Breaking through for the signal is what I'll continue to be watching for. Right now, I think the best overall view of it, in my eyes at least, is a slight bullish bias within a sideways market, which generally for me means I'm waiting for it to break. So not that time. We definitely saw some move, and that 50 has been very, very strong for it on the intraday. Gold, this is why it's not a close until it's a close, right? It's not how you open, it's how you close. Gold ran up into the 200 early in the trading day, pushed through and fairly quickly. If we go in and look at an intraday time frame, maybe we'll look at the hourly. You kind of see here's our break of the 200-day moving average, really pushed through, came back down and tested it, and then basically, gave up from there. And that's why so many of the coaches, and that's why and I know many of you, always look at it. It needs to close. It needs to close, because so often it will stick its nose just above resistance or just below support on the intraday. There will be some nice intraday movement off of it. And then, of course, by the time it closes, we see this, where at least today it's a failure on the breakout side of things. Now, I don't think anything has dramatically changed. I expected the 200 to be hard to break. And so as it was pushing through it today, I was thinking, I guess I was wrong. But now I think, well, I guess I was right. So I got to think both in the same day. Thank you, gold. Really, as long as we continue to hold the break, I think we're in the same exact spot. I still think closing above the 200 is a bullish signal to be looking out for. I still think that you probably, if you're not in it already, probably should wait for that signal, because you should always assume, resistance is hard to break. You should always assume the first test of the 200-day moving average is going to be a difficult task. So hard for me to get on board with buying here, because, well, where's your risk reward? It has to break resistance for you to make money. Even if that's true, your stop loss has to be down here at 1238, 1237, something like that. There's just no risk to reward. So I think we'll continue, at least for me, I'll continue to do the exact same boring thing I've done with gold, for the last little while. Same real situation over with silver. We did work close to that resistance level before selling off of it. We're continuing to be very sideways, still pushing that side. I still think we can watch for that break of 15. I still think that's a nice signal. And I still think, well, it's not a lot of dollars. That's a decent move. There's not a lot of overhead. If silver can, in fact, take out that 15, probably shouldn't be that big of a deal to work into this old bottom. That should be a challenge in my mind. And depending on how long it takes, that 200 might be able to catch up to us and be there as well, which would maybe be an ideal scenario from a technical point of view to me. But that will depend. If it happens tomorrow, that 200 is not going to have time to keep up. But if we continue to consolidate, which we should expect, this is going to be difficult to break. We've tried a few times and failed every single one of them. Should be a nice little breakout opportunity when and if it happens. But right now, I still think you have to say it sideways. If you made me do anything, I'd go short today, if that's what I had to do that. Let's see. So was the silver sell-off after the Fed announcement? Well, let's go take a quick peek at our hourly chart here, Fortino, and see how it reacted. Just like our gold, we had that run, and then basically it wasn't quite coincide with it. Now, I wasn't staring at the market during that time period. It wasn't quite lined up with it, but that is where the selling accelerated. So that would have been right here. So we were seeing some selling off of resistance before that happened, Fortino. Then once that happened, of course, we did sell off from that point. So yeah, good eye there. So, I mean, we were at resistance. So that's the thing to always remember, we didn't need news to struggle there, right? It was looking like a big, beautiful green candle smacking its head right into resistance. Never assume it's going to break resistance. It's easy to do. It really is. Oh, we're pushing resistance. because it might. If we get to resistance, it could break resistance, right? We're probably watching for that to happen. Just don't trick yourself into thinking because you're watching it, it's going to happen. And I know we can all be guilty of that if we're not on our game. So I know I can, at least. I think most people can. Over in the natural gas market, pretty volatile still. We did see some upward movement early, but really it's another one of those candles in natural gas. This continues to be overall, in my mind, a very difficult swing traders environment, probably best left alone directionally at least. I still am interested in watching it try to work into 4. That is what I'm hoping to happen, and see if I can generate some sort of signals there. I could see a scenario where that might actually get us a swing trade, but it's got to get there. It's got to get there the right way. It's got to work into it and actually give us some signals. I do think we can kind of watch this as a support level. If this falters, probably should expect a little bit more selling. But again, the simple reality is when it comes to natural gas right now, most of this movement is happening on the intraday level, and it makes it, at least for me, difficult to trade it on a swing level. And so if you're not giving it that intraday love, I think it's still fun to watch. Eventually something is going to develop and we'll see it when it happens, but I don't think that's today. And lastly, over in our friends in crude, they did have a nice rally. Nothing really changed from a technical point of view, and nobody should be terribly surprised. Nothing was going to surprise us today, right? More downward movement or a little bit of profit taking, but nothing really to see here. Our breakout is intact. We did kind of retreat off of the intraday highs. Again, it's one of those things. People might be buying into it, but how committed are they? Probably not. How do you be committed in a trend like this, right? So first sign of trouble on any shorter term time frame, they're probably hitting the hills, right? And running out. Let's go to an hourly time frame so we can kind of see that action. So kind of ran out. So right now, crude really hasn't changed, in my opinion. If you're in it, the reasons you were here are still there. If you're not, you can, certainly watch for it to retrace potentially into 50. I think anybody who's not in crude right now probably would like to see it retrace back into 50, test that old floor as resistance, maybe generate some sell signals and get another opportunity. I think just realistically speaking, you could also make an argument that we'll have some sell signals if we take out this 2-day floor now. So if we do take that out, I expect more downward movement as we kind of talked about, and I think everybody's generally in the same ballpark. 43 really is our next kind of general area of support, and nothing that I've seen today, even though it did have a little bit of a bounce back day, has changed that. Fortinos, we saw on the dollar, we popped right off of that 50. So another volatile session for the dollar, but that was the dollars who kind of came back into that 50 and popped off of that on the intraday. So another volatile day, but we're still very overall kind of sideways within that range over on the dollar. So I mean, it was a day of bears, no doubt about it, and it's going to go down in one of those days that is going to haunt me because I don't know why people were buying. Nothing bad happened to me or anything like that, but I don't know why people were buying going into the Fed announcement, and I don't think I ever will. But it is what it is. I'm glad it wasn't me. I'm sure it wasn't you guys. I'm sorry, people who were buying into it. Hopefully it was, day trade scalping stuff and you made some money, but I don't get why you were doing it. So with that, ladies and gentlemen, again, really everything is pointing to bearish right now. You don't want to overdo it. Don't want to lose your mind and lay it all out on the line that we're going to continue to drop. But I think you have to continue to treat the entire market as we're going to continue to drop until we see anything. Keep an eye on those support zones in the NASDAQ, in the Dow. We've already taken it out in the S&P. We've long taken it out over in the Russell. Those are really kind of the last line of defense from a technical point of view, at least in the short term. New things are going to have to develop or we're going to have to sell off a lot. Now, I would expect new things will develop and we won't free fall to some of those longer term trend lines, but who knows? Who knows? So obviously make sure you're following those trading rules, but it's ugly. At least from and I say that not in a bad way. It's fine to be bearish. Right? It's not like we're an all bull team over here. So most of us have been skewed to the bearish side for quite some time. So we're okay. Hopefully other people are as well. But a lot of bearish signals, no doubt about it. The only real sector that I'm seeing that you could make an argument for, at least today, is the utility sector. And I still don't think that's quite here yet, but it may be tomorrow if we can kind of see that turnaround. Still waiting for that turnaround candle. There are some interesting pullback scenarios developing in some of those companies in the S&P, some of those utility companies right now too. So it's going to be interesting. But let's Friday, and then kind of have a couple easy theta days maybe over Christmas Eve and Christmas. So we'll see where it takes us. But ladies and gentlemen, that'll do the market recap for the day. And as always, I certainly appreciate everybody's time. It's always great to see you guys. And thanks for saying hello to me once things started going. I still don't understand how I'm seeing yesterday and you're seeing today, but whatever. It's not the first time I've been confused. That technology won't be the last time. So if you haven't already, make sure you subscribe to the channel and hit the notification bell, and be sure to follow us over at Tackle Trading on Twitter as well. If you enjoyed the market recap, it's always helpful and appreciated if you do give it a thumbs up to let us know that we're on the right track. If you're not already a member of our team over at Tackle Trading, get over there, check us out. Sign up for a free 15-day trial, see what we're all about. You'll be happy that you did. With that, ladies and gentlemen, thank you guys so much for your time. As always, it is my pleasure. Get out of here. Happy trading, and I will see you all in the next one. So yeah, it's good to know I'm not alone, Whitney. It's just, mine sometimes are more public than I would like them to be, but whatever. I gave up on being embarrassed about that stuff a long time ago. So if that was the case, you wouldn't see me, because I've had so many losing battles with technology. So, all right, ladies and gentlemen, thanks a lot. Get out of here, and I will see you tomorrow.